In this video, I will introduce some of the most common forms of visualizing data and demonstrate when each form is appropriate. I will talk about table design principles and how to create pivot tables in Excel. One of the most helpful ideas for creating effective tables and charts for data visualization is the idea of data-ink ratio. Data-ink ratio was first described by a professor of statistics and computer science at Yale University. His name is Edward Tufts. In year 2001 in his book, The Visual Display of Quantitative Information. Data ink is the ink used in a table or chart that is necessary to communicate the meaning of data to the audience. Non-data ink is ink used in a table or chart that is not useful in conveying such data to audience. The data ink ratio measures the proportion of the data ink to the total amount of ink used in a table or chart. So in general, non-data ink reduces the data ink ratio, so we should avoid that. For example, here we have the data for a company that produces fine silk clothing products, and the company is interested in tracking the sales of one of the most popular items, which is the women's scarf. So this table shows scarf sales of 20 days. The style is similar to the tables generated with Excel using common default settings. So you see the vertical lines and horizontal lines. So this data table provides an example with low data ink ratios because most of the grid lines serve no useful purpose. So this figure provides some scarf sales data also. The style is also similar to the charts generated with Excel using common default settings. So this chart is another example with low data ink ratio because the horizontal lines in the chart also adds little additional information. So both the table and the figure, most of the lines could be deleted without reducing the information conveyed. However, an important piece of information is missing from this figure. You probably have noticed this, the labels for the axes. The X and Y axis should always be labeled in a chart unless both the meanings and unit of measure are obvious. So this table shows a modified table in which all the grid lines have been deleted except for those around the title of the table. Deleting the grid lines in this table increases the data ink ratio because a large proportion of the ink used in the table is used to convey the information, which is the actual numbers. So similarly, deleting the unnecessary horizontal lines in this figure increases the data ink ratio. Removing the unnecessary lines makes it easier to read the table and the figure. Another useful concept is white space. White space in a table or a chart can improve readability. So this principle of white space is similar to the idea of increasing the data ink ratio. Removing unnecessary lines in the table and the figure has increased the white space, making it easier to read both the table and chart. Notice that we've added the X and axis labels, which is day and sales. Note that deleting these horizontal lines and removing the markers at each data point can make it more difficult to determine the exact values pointed in the chart. However, a simple chart is not the most effective way of presenting data when the audience needs to know exact values. So in these cases, it's better to use a table. Both table and chart will help us display data more effectively. In general, charts can often convey information faster and easier to readers, but in some cases, a table is more appropriate. Tables should be used if the user needs to refer to specific numerical values, or the reader needs to make precise comparisons between different values, not just relative comparisons, or the value being displayed have different units of very different magnitudes. For example, the accounting department is summarizing the company's annual data for completing its federal tax forms. So the specific numbers corresponding to revenues and costs are important, and not just the relative values. Therefore, this data should be presented in a table like this. Similarly, if it's important to know exactly by how much revenue exceeded expenses each month, then this will also be better presented as a table rather than as a line chart, as you can see here. Notice that it's very difficult to determine the monthly revenues and costs in this figure. A solution can be we can add these values into data labels, but they would clutter the figure. And the more data point you have, the more clutter the figure becomes. So a better solution is to combine the chart with the table into a single figure, as is showing here. This allows the readers to easily see the monthly charges in revenues and costs, while also being able to refer to the exact numerical values. Now we want to display the data not only on revenues and costs, but also employee headcount for each month. Costs and revenues are measured in dollars, but headcount is measured in number of employees. Although all these values can be displayed on a line chart using multiple vertical axes, it is generally not recommended because the values have widely different magnitudes. So for example, the costs and the revenues are in tens of thousands, whereas the headcounts is only 10 each month. It will be difficult to interpret changes on a single chart. Therefore, it's better to use a table similar to the previous one instead of a chart. In designing an effective table, keep in mind that the data ink ratio and avoid the use of unnecessary ink in tables. So in general, we should avoid using vertical lines in the table unless they are necessary for clarity. We should use horizontal lines only for separating column titles from data values or when indicating a calculation. Here we have different designs of a table. They all display the costs and revenue data. Which one do you like the most? Most people find design D with the fewest grid lines is easiest to read. So in this table, grid lines are only used to separate the column headings and to indicate that a calculation has occurred to generate a profit row and a total column. This table breaks out the revenue data by location for 9 cities and show 12 months of revenue and cost data. Here's the right side of the table. So every other column has been lightly shaded. This helps reader quickly scan the table to see which values correspond to which month. The horizontal line between the revenue for Academy and the total row helps the reader differentiate the revenue data for each location and indicate that a calculation was used to generate the totals by month. Columns of numerical values in the table should be right aligned. This makes it easy to see differences in the magnitudes of values. If you're showing digits to the right of the decimal point, all the values should include the same number of digits to the right of the decimal to be consistent. It's generally best to left align text values within a column in a table. So for example, the revenue by location, that is the first column here of this table. Column headings could either match the alignment of the data in the columns or center it, such as the months center over the values. So a useful type of table for describing data of two variables is a cross-tabulation. Cross-tabulation groups variables and provides a tabular summary to understand the correlation between different variables. A pivot table is a cross-tabulation in Microsoft Excel. This table shows data for the first 10 restaurants from a sample of 300 Los Angeles area restaurants. The dataset includes the quality rating, the meal price, and the usual wait time for a table during peak hours. Quality ratings are example of categorical data, and meal prices are an example of quantitative data. So for example, restaurant 5 is identified as having very good quality rating and a meal price of $33. A tabulation of data for quality rating and meal price data is shown in this table. So the left and top margin labels define the classes for two variables. So on the top margin, you see the column labels $10 to $19, $20 to $29, $30 to $39, and $40 to $49 correspond to the four classes of the meal price variable. Each restaurant in the sample provides a quality rating and a meal price. So for example, we talk about restaurant 5 has a good quality rating and a meal price of $33, so it should belong to the cell in row 2 and in column 3. From the right margin, we see that the data on quality rating showing 84 good restaurants, 150 very good restaurants, and 66 excellent restaurants. Similarly, the bottom margin shows the counts for the meal price variable. The value of 300 in the bottom right corner of the table indicate that 300 restaurants were included in this data set. So in constructing a tabulation, we simply count the numbers of restaurants that belong to each of the cells in the cross tabulation. Next, I'm going to show you how to create pivot table with the cross tabulation in Excel for the same data set. So here we have the 300 Los Angeles restaurants. So we're going to highlight all records. Under Insert, you can insert a pivot table. You can also, I'm not showing the top in here, but the data in the top menu, if you click on it, and then you can click on Summarize with Pivot Table. Either way will work. So then the pop-up window show up. You're going to first select Table Arrange because I already highlight the whole data set range, so it automatically populated in here. You can choose to place the pivot table on a new worksheet, but I'm going to put it on an existing worksheet so I can see them with the data. So then click OK. At first, the pivot table area looks empty, but as you click in the fields in the setting, things will show up. So we want to select restaurant, quality rating, meal price. So we want to make sure that the quality ratings is in the rows and the meal price is in the columns, and the count of restaurants will be in the values. Okay, so this is our first draft of our pivot table. Because it contains a lot of data points, we would like to group them. So the way we group it is to click on one of the column numbers under Group Selection, select the group field, and then set it start at 10, ending at 49 by 10. So we're gonna start from $10 price, end at $49 price, and then using a group gap of $10. Then we click OK, and so we can see that the meal prices has been separated into 1, 2, 3, 4 groups. And the count of the restaurants has also been aggregated accordingly. We can also move the quality rating categories around by right-click and move. For example, we want to move the excellent to the end. So here's our pivot table. We can also insert a pivot chart now that we have the pivot table. So in the insert, under the insert, and there's a pivot chart in here, and we can select the same table range, or with the pivot table selected, under the insert we have the pivot chart. And then we can see that a pivot chart is created with the quality ratings under here, and then each colored columns will be a different group of meal prices. Yeah, so here we have the pivot chart and the pivot table.